Morning. We welcome you all to the live webcast today on case study of the Binani Cement resolution under IBC, organized by Committee on Insolvency and Bankruptcy Code of ICAI. Now, I would request our chairman of the committee, CA Anil Bhandari ji, to please start with the proceedings. Over to you, sir.
Very good morning, and we welcome all our participants today. I'm glad that we have some very well-known speakers with us for this case study. So I do have with us and welcome Vijay Kumarji for taking this session. We have CA Nirav Pujaraji and Mr. Alric. I also have CA Pramod Boog, who happens to be the vice chairman and one of the most dynamic council friends and colleagues in the Central Council. So welcome everybody. We started this case study series. I think the first one that we had was last month. We had this idea in the committee that, we wanted to make sure we come out with case studies to ensure that the practicing chartered accountants, practicing insolvency professionals do get this nuances or some tricky issues which the IPs go through trying to handle cases, trying to preserve value. And these are the learnings that I believe we should carry from these case studies to help us to kind of get the experience that we don't have. So I really am excited that this is now getting converted into a good series, and this is the second one that we are having. Star Steel case study was also very, very interesting, the one that we did last month. And now we have Binani Cement. We were just having a casual chat before we came on to this seminar. And we were just discussing what is the value that these cases, the 220 approved cases, which would have got to the government, to the creditors and all of us put together, is roughly around 1,85,000 crores. And I think these are some large cases which have, of course, contributed to this fantastic value. It stands at around 44% of the total outstanding, which is also interesting. But I think as we progress further, as this evolves further, I'm sure we'll be able to preserve value. We should be able to derive more and more value out of these cases which are coming back to us. So I think this is really interesting. Please do stay hooked on to our case series. The committee, the Insolvency and Bankruptcy Committee at the ICAI, is also launching very soon the nuances that you have in the cases which have been, the judgments which have been passed. And I think we would be releasing that book very, very soon. We would want to do the audiovisual part of it as well very soon. But of course, all your comments are welcome. We are also on the track for forming an expert advisory group across the region to make sure that we comment on the interesting, should I say, issues which are likely to come up for this act in the next 6 months because of the COVID situation, and also the pre-packs that we're likely to see. The government is working on it, and I'm sure all of us as practitioners or thought leaders should contribute and try and see if we can evolve that into an interesting one for us. I was also discussing with IOG in the morning and with Alric that there are various parts to any resolution that you do. The first one being, can you do something before the resolution itself, before a company goes in, before the banks let the companies go in? What is it that we could do around the company to save it getting into an IBC? Or even if they were not, or we were not able to save the company, is there a better way to get the value out without destroying the value? I said this in my last session as well. Jet Airways could have been saved from a value perspective. Hopefully, if there were a lot of action which could have been brought before, and that's just a name. I'm saying there would have been several organizations and companies in this country where the value could have been preserved, and we would have had more for the debtors or creditors, and for the government and for the banks all put together. So having said this, and to keep this short, thank you so much for coming in. We would do a presentation. I will hand this over to our speakers today to take you through this very interesting case study on Binani Cement. We have three speakers. They would share their insights, their knowledge, their experience, and we would, of course, come back towards the end of the session with questions and answers. If you have any questions, please do send it to the Institute, to Rita Madam, and we would be happy to take your questions. And I'm sure these gentlemen here would be happy to take us through the answers and their experience. So thank you once again. And I would now pass on the mic and the table to Mr. Iyer. Mr. Iyer, it's all yours now. Thank you.
Mr. Bhandari, sir, Pramod ji, respected chairman and vice chairman of this committee, senior professionals, my respects, my regards to my fellow professional brothers and sisters, ladies and gentlemen. Thank you very much for this opportunity to share our learnings on this project. And I'm sure this very commendable effort by this committee of our institute to take on case studies of projects which have been successfully resolved and to see what learnings each of us could pick up from there is a very, very commendable effort, and I will acknowledge the efforts of this committee and of our institute. Thank you, sirs, for this opportunity. Today before us we have this case of Binani Cement Limited. It had been resolved a year ago and a bit, but it's still very topical because of the many learnings we have on this project. Alric, next slide, please. So what we'd like to cover today, with your permission, ladies and gentlemen, is, if you permit me to provide a bit of background and context to this case, to refresh our memories of this one. Talk a bit about the corporate insolvency resolution process, the model we try and adopt it for this process, some of the key elements, again, then relating to this process, be it the claims verification, all the other activities, the code compliances. And then I will call upon, with request, Nirav and Alaric to support me on this, on managing the affairs and the resolution plan process. I was the resolution professional on this project, and my colleagues Nirav and Alaric worked on this project with me. Next slide, please, Alaric. So to give a bit of context, ladies and gentlemen, I think it's important for us to understand the paradigm shift that insolvency bankruptcy code set out. Mr. Bhandari, in his opening remarks, also clearly mentioned that it is thanks to this code that almost 2 lakh crores has been resolved for the benefit of the creditors and all stakeholders. It's no mean achievement, particularly if you look at the challenges one had faced with the earlier acts which were there, the SURFACE Act or the ICAI Act, and the limited success those acts had and those options had for resolving any such stress of a corporate debtor. So an IBC has been that paradigm shift. And why is that? The first and foremost was a fundamental principle which was brought about by the court, that it will be the creditor in control rather than the debtor in possession. The committee of creditors, made up by the financial creditors, were given control of the corporate debtor, with the resolution professional as an officer of the court, working under the jurisdiction of the court and the overall oversight of the committee of creditors. The whole process was not a sale or a liquidation or a recovery process. The objective was very clear, that this has to be a resolution-based process. Resolution means revival of the corporate debtor who was in financial stress. What is the financial stress? There's just an imbalance in the balance sheet whereby the liabilities at a stated particular point in time are over and above the stated values of the assets. So that imbalance in the balance sheet, if they are corrected, and there's a rebalance once again applied to the corporate debtor, it could perhaps revive, recover, and then thrive in the new normal. That's why it's a resolution-based process. And there are 2 minimum principles one applies in any such resolution process. The first and foremost is there is speed and transparency. It's done in a timely or a time-bound manner. And there is a maximization of value with fairness and equity to all stakeholders. These are the two principles again reiterated in this case, as we will see going forward, by the courts and by the actions of all concerned. And it's therefore thanks to this code that we have been able to see some successful turnarounds and resolutions. Mr. Bhandari mentioned about the SR Steel case, which was talked about in the last case study, as well as if you look at Bhushan Steel, Binani Cement, and the others as well. With this background, if you could move to the next slide, please. The key learnings on this project, if you'll permit me, ladies and gentlemen, to set the context as to what did we learn and what are we trying to achieve through this presentation of what are some of the key takeaways on this project. The 6 main takeaways on this project were, one was the maximization of value. It is paramount to the resolution process so that it is to the benefit of all stakeholders. The second principle which got enunciated and established was that the commercial wisdom of COC is paramount. And there is an oversight role to the adjudicating authority. The third, that the RP cannot act on his own. He's after all an officer of the court, and he has to act with the jurisdiction of the court and under the supervision of the Committee of Creditors. Mind you, ladies and gentlemen, the context is that this was a case which was very earlier on when the code was still initially being used and implemented. So a lot of these learnings were not there at that point in time. As you may know, even the IBBI has thereafter issued explanatory guidance on clearly demarcating what is the role of a resolution professional, the role of the Committee of Creditors, where there is an overlap and where there is not an overlap. But all that guidance has come much later. It is in this project we learned, we demonstrated, and it was reiterated by the courts as well. The fourth principle is, which we found, and I think is an important learning for all of us, that it has to be fair and equitable dealing in all that is done, in all actions. The fifth, let us not forget that this code and the process is only a means to an end. And the means to an end is commercial objective is that a successful resolution. The commercial principles have always to be maintained and followed. And six is the involvement of a creditor in default, the promoters, and how is it that are they allowed to participate or not participate. Section 29A came about right during the middle of this project, and we'll talk a bit about this later as well. Go on, please, Alaric. So to give a bit of background on this project, ladies and gentlemen, Binani Cement was a subsidiary of Binani Industries, but was a holding company. It was a listed company. It had an integrated plant in Rajasthan in Sirohi district and also a grinding unit. And it was engaged in producing OPC, one type of cement. It had a capacity of about 3 million tons overseas as well. It was about 6 million tons here. It had overseas operations in China, the Middle East, and Indonesia as well. And more importantly, the takeaway was why this was a unique asset was it had substantial limestone reserves and well-established railway facilities already, which made this an attractive asset for any potential buyer. Go on, please. What caused the stress? Why was Binani Cement where it was at the start of IBC? One of the reasons one tries to establish is to understand why there was this stress. Even the Supreme Court has said in another case, it's important to establish the causes of stress, and that is one of the roles of the directors at any meeting of the Committee of Creditors. It is for them to provide that knowledge and insight to the Committee of Creditors to establish why were there reasons of stress so that those mistakes are not repeated again when you're considering a resolution plan. There were, if you see over a period of time, these were the 4 pillars, shall I say, over the 4 reasons for the deterioration. One was, of course, the overall reduction of activity in the construction sector. Automatically realizations came down, volumes and demand came down, whereas import costs and material costs continued to rise. So it had significant challenges on margins. Second, the company's overseas expansion didn't turn out the way they were expected. In China, the government there did not allow further expansion. And an initial foray into Mauritius was unfortunately not fruitful. So a lot of money got unfortunately expended there. There were pressures on the holding company to disinvest some of the holdings to try and reduce the debt, which again brings about challenges and distractions. And then and because of this continuous stress, the company got entangled into various other related party transactions. When those related parties were unable to pay, causing further working capital stress to the corporate debtor. All this led to a severe imbalance in the balance sheet, where liabilities far exceeded the assets of the company. Next, please. I will pause on this slide, ladies and gentlemen. This, I think, is an important slide for all of us. This could be the model for any resolution process. I've been politically correct and said the CRP model right in the middle. One may dare to say that he could be substituted for the resolution professional. He's the person in this ring of fire among all of this. But what does this slide try to suggest? One, that there are 6 key activities the resolution process has to accomplish. First is the code compliance and ensure that all activities are in compliance with the code. Then there is the whole claim verification process. Third is the overall management of affairs. Fourth is the resolution plan process by itself. And in all this is the stakeholder management. Stakeholder management is the multiple stakeholders a resolution process professional has to deal with. Of course, it's the committee of creditors, with the financial creditors with their various pushes and pulls. Then you have the promoter. Then you have the management. Then you have the officers of the company. And then you have the employees. And then the workmen. And then you have your contract labor, the vendors, the suppliers, the customers, the dealers, the distributors, and the statutory authorities. The number of stakeholders does not end. And each one requires a different way of dealing, a different method of dealing. And continuously, let us be careful, let us understand, the RP is nobody's friend, nor is he expected to be anybody's enemy. He will be accused of collusion with everybody and anybody. But at the end of the day, he has to hold his ground and continue to steer the course. And the 2 elements on the side, on the right side, are the 4 external support systems an RP has for the successful CRP process. One, that you must ensure that you have a high-skilled team, which we did in this case, thankfully. We engaged technical advisors of very good standing. We continuously ensured that the process integrity was maintained. And we were always focused on value enhancement, and we'll talk a bit about that as we go along as well. And the 4 internal attributes an RP must have. On the right side were the external support system that an RP requires for a successful CRP process. On the left side are the 4 internal attributes over and above the basic attributes one may expect of a professional. Even our code of ethics as chartered accountants, or even the code of ethics as per the IBBI for our insolvency professionals, which is integrity, impartiality, independence, objectivity, and competence. But over and above, there are 4 fundamental attributes required by an RP to demonstrate for a successful process. First, to be transparent. Second, to be consultative and collaborative, to discuss. 3, to be proactive when you have problems. Once upon a time, as chartered accountants, we were all armchair consultants. It's in this new normal, in this new world, we cannot afford to be so. And particularly as a resolution professional, you can't afford to be so. You have to be proactive to address issues, challenges, and problems. And finally, in all this, you must still respect the confidentiality of information, the confidentiality of conversations you have, and the trust, therefore, that you build up. Next slide, please. So to give an overview of, very quickly, so as to set the context in time, this case was admitted about in June 2017. And thereafter, you had the public announcement and the COC was constituted. Go on, please. By August. And then you had the expressions of interest for a resolution plan. From August to October, you started stabilizing the process. Ladies and gentlemen, the corporate debtor activities were shut at the time of the commencement of the CRP. They were because of the financial stress, and over and above, there were significant rainfall at that point of time, which had caused flooding in quite a few of the areas. And because of all these various complications, the plant had shut down and had not revived. So we had to spend quite a bit of time to get things back, as we talked about maintaining the balance and maintaining the value. Thereafter, from October, we started actively looking at the resolution plan process and going out and seeking resolution plans. And in the meantime, that's when the amendment came on the complication of 29A and the inability of certain promoters who are willful defaulters to be able to bid in the process, which was the case here as well. The promoters of this company also chose to bid, but then they were not allowed to. In spite of all that, we achieved 6 binding resolution plans. The committee of creditors identified the highest one as evaluated, and that was approved in March. So it was done within the timelines, if you see, from July to March. Go on, please. And thereafter, one of the applicants made a higher offer, and that was addressed by the court. The court directed the committee of creditors to relook at and re-examine that offer. That was approved. That is Ultratech's plan. This was then after affirmed by the NCLAT and Supreme Court. And within a matter of few days, the closing has taken place and the transfer has happened. And this has been a successful, quick implementation and transfer. Go on, please. So the success of this case has been, it's been one of a kind, because this is maybe one of the only cases where the resolution amount was 100%. There was over 6,000 crores of financial creditors, and similarly far more, a substantial amount in operation creditors, statutory dues, workmen, employees, and all of that. The successful resolution applicant committed to pay 100% of all these dues, which was duly done. And that was how, in this case, you had 100% resolution. Go on, please. So in terms of the activities in the resolution process, which are the fundamental ones and why this was tricky and why this is important when you look at some of the complex or more important ones or significant ones. One, to be conscious that you have the right key professionals to support you on the process. Let us be clear, let us not have any delusions of grandeur that we have a monopoly of wisdom. It's important that you have the right skills and expertise to address. Then you need to be conscious about managing the affairs, and we talked about the stakeholder management. And in all this, you also have to work on the resolution plan process. You have to be mindful that a proper due diligence is possible by potential resolution applicants. It is an hostile environment where not everybody chooses to help you, be it the officers of the company, be it the promoter or the management. It is like a hostile takeover. So what are you able to do to help the resolution applicant get more information always helps in getting a better appreciation of the value. We had set out a very good practice in terms of opening of the resolution plans. I'll request my colleague to go about it, to discuss it more later. But it helped in setting out a best practice. And we were conscious to ensure that there was uniformity in the information to all RAs so that nobody could challenge this in court. There was, again, therefore, the fundamental principle of transparency and equity established right through the process. Next, please. In code-related compliances, it's more for all of us to be conscious that this was also done, but again, to be mindful this was done very early on when the code was still in its nascent stage, when the valuers for establishing liquidation value had to be done by the IRP itself, the public announcement, ensuring that the information memorandum was comprehensive enough, conducting the COC, the forensic auditor, and compliances. I will move on quickly from this one rather than labor this slide, please. So apart from stakeholder management, when we talked about the CRP model, ladies and gentlemen, the other element was claim verification, which was an important stream of work. The complexities in this project were that even the financial creditor claims were complex. One, there were many number of financial creditors with substantial amounts. Like I said, the total financial debt was over 6,000 crores. And each of them had complex funding structures. So it became very difficult to understand what is the amount which is claimed, is it in line with what is in the books, because it was not. There was an earlier restructuring scheme proposed which failed, and therefore the balances in the books as compared to the balances by the banks were quite different. To reconcile that was all those mismatches became difficult. But it was something we established. And the way we tried to do it, and I will encourage all of us to continue to follow these principles anytime you go into claim verification, you ensure that you always have a philosophy of fair treatment to every claimant. Second, you ensure a transparency in your actions, so you don't do things in hiding, but you are quite visibly transparent in your actions so the creditors can see where you are coming from, present all the papers and the documentation you're relying on. And third, establish a uniformity in your process. So again, then no creditor challenges you that you have been preferential to any particular person or the other. In the other, I would like to call out that there were corporate guarantee issues also, and the whole principle of whether corporate guarantees is debt or not was also established in this case. Go on, please. Similarly, on operation creditors, there were over, if I'm not mistaken, over 600 odd claims from operation creditors for a variety of creditors, MSMEs, suppliers, distributors, dealers, statutory authorities. And in many cases, the balances books did not agree with the balances being claimed. But again, ensuring that you had a uniformity of approach, transparency and action, and with an overall philosophy of fair treatment helped us navigate quite a few of these challenges. In many cases where the balances books of the corporate debtor, which is normally your principal basis of accepting a claim or validating a claim, was not in match, we took on further documentation of the creditors, understood, sat down with the accounting professionals, the accounts and tax teams of the corporate debtor, and established the claim. We realized that, even as chartered accountants, we realize that there is a story always outside the books which is more interesting than what is in the books. And it is important for us to understand the entire story, understand the full context, have a better appreciation of the transaction, the balance, and then accordingly validate, verify the claim. And that's how we try to do it here as well. Go on, please. I will pause here, ladies and gentlemen, after I've talked about the stakeholder management and claim verification process, and I've talked about the context of the entire CRP process. I will request my colleague Nirav now to take us through the other element which is very critical and very sensitive and perhaps more interesting and challenging in managing the affairs of the corporate debtor. Nirav, please.
Thank you, Vijay, and a very good afternoon to all the participants. Mr. Iyer has already laid out the earlier principles in terms of the CIRP model, and managing affairs of corporate data is one of the core elements and responsibilities of a resolution professional, and in fact is directly will be responsible for ensuring one of the key responsibilities of RP, that is maintaining going concern and preserving value of the corporate data. And more importantly, the overall objective of around value maximization, again, how we run the operations or how we manage the operations of the corporate data will have a direct implication on the value maximization which can be achieved at the end of the process. So with this background, what I will be doing today is we'll take you through our journey in terms of what challenges we faced during takeover of Binani cement under the CIRP process. What was the ground level situation, the challenges faced by the RP team, and in line with that, what actions we took to deal with some of these challenges and make sure that the going concern was maintained. And to summarize with would be the learnings which we take out of this particular case study. So to begin with, in terms of the ground level situation, which Mr. Ayer again outlined that when we went in at the start of the CIRP process, the plant was shut. It was not operational, and this was basically due to the liquidity issues which the company was facing. It was not having sufficient money to obtain the basic raw materials which were required to run the plant. Basically, the from a financing perspective, the company had already exhausted most of the credits which were generally available from the operational creditors, and most creditors were having a large outstanding. And with the announcement of the CIRP, this basically sent more panic amongst the vendors. As a result, clearly, obviously, there was no vendor which was willing to supply on credit, and they wanted upfront cash. And in fact, there was you can literally say there was a run on the company, as we say, run on the bank for collecting whatever dues which were outstanding. Apart from the plant, which was located in Rajasthan, the company had a corporate office in Bombay. That is where we attended, but again, that was an office which was not of Binani Cement. That was again a promoter office which was being used by the officials of the company. In terms of once the process starts, one of the basic aspects is obviously taking charge of the asset, and that is ensuring safeguarding the assets. One critical aspect here was even reaching the site. So in fact, when we went, the officials generally, given the fact that these were the initial stages, there was not much clarity in terms of how the CIRP process runs out. There was no precedences in terms of completion of a CIRP mandate. There was naturally a lot of questions and resistance from the corporate debtor officials as well, given the fact that there was obviously the fear that what happens to their from a job perspective, the continuity, and more importantly from a promoter point of view, their continuity. So these are aspects which we had to deal with. I already outlined liquidity issue was a major issue. Working capital management, the company was out of finance, which was leading to further problems and plant being in a shutdown mode. Again, as I mentioned, with the initial stages of CIRP, when the announcement took place, as I said, most of the vendors had long-drawn balances. So what really resulted is that when we reached the plant to take charge of the asset, immediately there was a strike situation, mainly from the transporters as well. So while the plant was not operating, whatever finished goods or finished stock which was lying at the unit, even those dispatches stopped because the transporters who had long outstandings refused to dispatch any material, and they formed a union so that all transporters were not going to ferry their trucks to enable the dispatches. So this is one major issue again which impacted going concern, and we had to deal with this. Apart from that, employees and trade unions. So this company had a large manpower force. So while employees, I think, were to the around of 800 employees, but more than that, the contract manpower was to the extent of 2,000. So even the contract, and they were past dues to employees as well. So again, with the onset of CIRP, as I said, there was uncertainty. So even the employees, so trade union labor force also went on strike. So even they were not willing. So this was again one of the challenges from a maintaining going concern. Not only liquidity, you also need stakeholder support, that is your transporters and manpower, that is labor, which has gone on strike. So that had to be dealt with. Another unique aspect to this, which Vijay outlined earlier, was that the company had certain investments overseas. So this was not directly part of the balance sheet of Binani Cement. However, there were subsidiaries which were having investments in China and Middle East, and there were certain operations. And again, from a value perspective, for any incoming investor, since these were subsidiaries of Binani Cement, the investor would also look at these companies. So again, how do you control these investments as well and make sure that there is no activity which is compromising the value proposition for the stakeholders? So, and when the asset is not even in India. So this was another added complication which had to be dealt with. Another important aspect, we talked about employees and labor force. Another important aspect was the senior management team. Now, whenever the CIRP gets commissioned and the RP takes over, while obviously the RP team will be taking charge, but it is very critical to also the senior management team of the company, because these are the folks who have been actually running the business till now. They are aware of what the operations have been, what the commitments have been. So it is very critical to get them on board. Otherwise, they can definitely become a disruptive element in ensuring or in allowing the RP to maintain or achieve the objectives of the code. So here the aspect was that, again, this senior management team was relatively new. So they were, so I think in a way that helped to our cause, I would say, because as we have seen in many other cases also, if there are employees who have been with the company for long, many times the loyalty is more with the promoter than with the company. So in this particular case, the senior management team was related because the most of the senior guys had left with all the challenges which the company was facing. Having said, there was one complication, that was not all of the senior leadership team was on the payroll of the company. So many of them were on the payroll of the holding company of Binani Cement, that is Binani Industries, and they were on deputation to Binani Cement. So this becomes a complication, or was becoming, this becomes a complication in terms of when, as RP, you want to get certain responsibilities undertaken from the corporate data officials, and if that person is not on the payroll of the company, so there is a complication which needs to be dealt with here. So this is something which I would also urge, whenever you guys look at CIRP mandates, also look at the company personnel who are working and whether they are on the payroll of the company. And obviously, there were even statutory dues which were unpaid, which resulted, which had to be dealt with. I will outline these challenges later as well. Apart from this, I think one important point which I would make out on here is that when we went in, obviously, we studied the existing setup, how the operations were run, while the current operations were not functional. One important element which was identified was that there were quite a few related party transactions. Now, this is again very important from a RP responsibility. While RP is responsible for undertaking a look back for 2 years or 1 year based on related party transactions. However, it is also very critical that any related party transactions are identified upfront, and in case those are required to be undertaken, obviously COC approval is required, and it has to be ensured it is at arm's length. So here the related party transactions which were identified were again very critical from operations running. So in fact, from a sales office, from a sales distribution perspective, there was one particular agency which was undertaking all sales in one of the particular states, and that again obviously compromised a certain market share for the company. Terms which were not necessarily at par with what sales would be undertaken.
I think, Alric, we lost Nirav.
Ritaji, please check. I think connection is not proper.
Yeah, there he's come back. Nirav,
Yeah. The connection was lost intermittently. So yeah, I'm back.
you may
So
want
why
to just
am
refer to. Yeah, go ahead. Please go on.
Okay, so the reason why I'm outlining this is again, these are situations which not only in this particular corporate data, I'm sure of you would have also encountered similar situations of related party transactions in other cases which you would have handled. So again, this is something which should be addressed upfront itself. We can move to the next slide, please, Alric. Right. So with this background, I think I would have covered some of these challenges in the earlier slide itself, but I would maybe talk about four specific aspects. So one, again, the basic objective was to protect and preserve value of the asset, and here the situation being that the plant was not running, and more importantly, was also when we went in, we studied the plant, the asset condition as well. From a again, there were quite a few units which were not maintained or which not had got regular maintenance as per the schedule, and as a result, the life of the asset was impacted. And from a maintenance perspective, there was certain immediate maintenances which had to be undertaken, which was again resulting in additional cost. And with liquidity not being there, this was again one challenge. How do you ensure that the value is preserved so that as and when the resolution process starts and investors come in and undertake diligence, these are not something which will again impact or result in value erosion. The other aspect was again around employee cooperation and promoter hostility. So, as I mentioned earlier as well, that given the fact that this was during early stages of CIRP, and in fact, as Vijay mentioned, when this case, when this CIRP started, the 29A ruling was not yet out. So promoters were fully confident that this is just a temporary scenario, and they would be back in control of the asset. So with this background, how do you get the necessary cooperation in running the plant? Challenges which we faced, and lastly was that while we deal with all of these challenges to ensure that the plant is running or is restarted, and as you go through the CIRP process, we would, there were multiple applications which were filed by various stakeholders, including operational creditors, in fact, the shareholder, that is the promoter itself, and even other financial creditors in adjudicating authority, in relation to the CIRP process as well. The point being here, in this particular case, obviously, while whatever litigations were filed, finally those were all rejected by the NCLAT, and none of those were upheld. But the point to be made here is that CIRP process is obviously prone to litigations. The most important thing which one RP can do is follow the process, ensure compliance to the code, and maintain transparency. And and as and when these litigations or applications do come up, the same will have to be dealt with. Next slide, please, Alric. So, in terms of the challenges we discussed, so what are those steps which we undertook? So, in terms of the takeover and security of the assets, one thing which we did when we went in was we visited each and every facility in India of the corporate data, and we not even visited. We in fact even took video recordings of the complete facility. So that is even before the valuers came in. We Yeah. Apart from that, we also appointed an independent security agency to of agency.
Vijay sir, if you can take over.
Yeah. Yes, thanks a lot. Till Nirav comes back, I'll substitute as the RP. So we were on the short-term measures which were addressed, and we talked about ensuring that we discontinued related party transactions. We did an assessment of the working capital, met the key stakeholders, and I know Nirav paused when he talked about appointment of security agency. These are some of the basic protocols we follow now. I suppose all of us follow on every project. The appointment of a security agency, an independent security agency, to show that the RP has demonstrably taken charge and custody of the assets is now virtually a best practice across all projects. May I just quickly go on to the next slide, please? So these were some of the medium term and long term. After you address the immediate steps, what is called the response on an immediate level, and once you try and stabilize operations to an even keel, we then can move on to taking some of the medium term and long term measures. Why? Because not only do you need to preserve value, you also need to ensure that you are able to increase the value of the asset to any potential bidder. So one was we were able to mobilize interim finance, and thankfully one of the creditors on the committee of creditors gave us and was willing to extend that benefit and the level of line of credit. And with this line of credit, we were able to increase the level of inventory, stabilize operations, carry out certain critical capital expenditure and maintenance of the CLIM, and thereby we were able to operate at a much higher level of capacity utilization. And quite a bit of this debottlenecking activities were accomplished in the medium term. Second, what we were able to do quite proactively is engage with the dealers and distributors of the various markets. Once they realized that we were willing to work with them and we were very conscious of supporting their activities, the dealers themselves came forward with various options. They came with various solutions. We realized that our intent was quite credible and honorable, and we were willing to increase the value of sales in the market. So they themselves came with the options, telling us where we channel the various products to get the maximum realization. And we learned to work more collaboratively. Like I said, one of the 4 themes was transparency and collaboration. That really helped. Apart from that, we also focused on maintaining our relationship with the vendor and the transporters, so that they developed a degree of trust with us. They were willing to then work not just on cash and carry, but also on certain credit terms, and also, again, showing us how we could operate the plant better. We learn, if we are willing to understand that we don't have delusions of grandeur, and we do not have a monopoly of wisdom, if that principle is maintained by each one of us as professionals, and particularly as a resolution professional, we have far more to learn and far more to imbibe. I will pause here once again as Nirav has been hopefully be able to come back, and I will request him to go through some of the long-term measures we addressed in managing the affairs. And I know given the challenges we have, I'll switch off my video and I'll request Nirav to do so as well.
Yeah, thank you, Vijay, and I think today my network has been troubling me. So thank you for covering up in the meanwhile. So taking up the long-term measures, one of the challenges, which is again something which is commonly faced in most of the accounts, is unpaid dues of government authorities. So now in this particular case, there were unpaid dues of VAT. So there were nearly since 1 year or more, VAT dues were not paid. And again, this is a time wherein GST was just about to start off. The CIRP commenced in 2017 itself, so GST registrations were still on, and all the earlier dues were pertaining to VAT itself. Now, so what the challenge was coming in, while we had obviously written as part of the takeover process, we had written to all stakeholders, including the government authorities, in terms of commencement of CIRP. And also the fact that moratorium is applicable and all past dues should come as part of claim. What started happening was that since the company had not paid the VAT dues, the dealers who were claiming input credit in their returns, which were being filed to VAT authorities, those claims were getting rejected. So in fact, the input credit was not reflecting because the company had not paid. So dealer was basically getting an additional demand of VAT payment to be made, which ultimately was impacting the dealers' liquidity. And these are the same dealers with whom we were continuing to also route our sales even during the CIRP process. So basically, with the government authorities or the VAT authorities reaching the dealer and asking for money, the dealers were basically then coming back to us and saying that, this is additional liability which they need to incur because of this. And the company needs to compensate them for this. So this is again a challenge which was coming back, is the fact that since the VAT was pertaining to past dues, and past dues are ideally not to be paid in CIRP process. So again, we then undertook several meetings with the VAT authorities to basically resolve this matter, explain them the CIRP concept, why the past due payments cannot be made, because this would be, resulting in unequal treatment as compared to other stakeholders, and also requested their support. So again, this is something which we continue to experience. Moving ahead, application under Section 19. So again, as I said, that one of the critical factors is also to ensure that you get necessary support and cooperation from the employees and the KMPs of the company. And if that doesn't happen, then one alternative which the code itself prescribes is filing an application under Section 19 with the adjudicating authority to take up this matter. And again, in this particular case, we had to file this application to get that necessary cooperation. Now, this particular process actually nearly lasted more than a year, or I can say close to 2 years. Now, as part of that, for 2 years, if the company is continuing, employees are continuing, at some point of time, as part of the year-end activity, even questions around employee appraisal and retention or bonus will come up. Even this came up here. Now, again, as and when this comes up, it is important to also look at the liquidity position of the company and accordingly take a call. In this particular case, we did also undertook employee appraisals, which practically the company undertook the employee appraisals. We did set few guidelines to basically ensure that the same is moderated and there is no out of line increments or promotions being given. But more so, even before we could do this, it is important to get COC on board. So this matter was presented to the COC. We appraised the CAC, how the employees have supported in this turnaround process. And this is obviously, this was undertook at a time wherein, the plant had restarted, the sales had increased, the production was happening, and there was EBITDA being recorded. So, as a recognition of that, which enabled us to, implement the increments and bonus. Again, related to employee, one challenge which we faced was also retention. So, and this is something which can again come up as you reach, towards the end of the CIRP process, and with a new RA coming in, there can be question marks which employees will raise, whether their employment will continue or how that will change with the new RA coming in. So even in this particular case, we did face some mass resignations in the sales and marketing team specifically, with the marketing head moving out. So again, we had to undertake certain necessary measures to make sure that the going concern is not impacted, because the sales and marketing team was one of the core elements to drive up the sales and volumes for the company. So again, efforts were made, and in fact, we also retained some employees, and also wherever required, we replaced or recruited new employees, obviously with necessary COC approvals in place. Yeah, and last is obviously the book closure and year-end activities, where we as RP team, again with RP being responsible, but again it is important that you also keep the existing directors in loop. This is one of the principles which we have followed. While the board may have been suspended under IBC, but directors do continue, and so directors' responsibilities also continue. Accordingly, we worked with the directors and KMPs of the company in ensuring necessary book closure and year-end activities. We can move to next slide, Alric. So, as a result of all of these measures, I think it is fair to say that Binani Cement was a great turnaround story for us, and in fact for the whole RP community as well, and even for the lenders. From a plant which was not operational when we took over, there were various strikes, whether it be from transporters, from employees, from even the MOs. This plant, recorded month-on-month sale production and sale increases as compared to, and it was much higher as compared to the last couple of years' performance. And net, we also recorded positive EBITDA during the CIRP period. One important aspect would be to highlight is also that the interim finance which we raised, we were able to partly pay out the interim finance during CIRP period itself, and at the end of the CIRP period, we left behind sufficient surplus for the incoming investor to basically pay off the interim finance, and also a positive EBITDA was left behind beyond that as well. All this was achieved even keeping in mind that the RP team also undertook necessary repairs and maintenance, which were again critical to maintain the quality of the assets, specifically the kilns. In fact, there were 2 maintenance rounds which were carried out during the campaign, that also required necessary funding, which were all covered CIRP period itself. More so, we also expanded the market coverage. So, as stated, but Binani Cement historically was mainly present in the west, that is Gujarat, Rajasthan being dominant, with some presence in Maharashtra and the north. But we also added new areas, mainly the central zone, that is Madhya Pradesh. We also started supplying cement there. So this is again, these are some of the few operational achievements and highlights which were achieved during the CIRP process. Next slide, please, Alric. Okay, so I will basically speak on 5 specific learnings which are very critical here. So one is, foremost, is the going
I think he still has a problem with the voice.
Nirav, again, I think there's a challenge with your audio.
Uh,
Hello, Nirav.
So whenever an asset is being taken over, it is very critical to assess the current situation. And
I think Neeraj ji, you can put off your video and let your audio run.
Nirav, let's pause here. Allow me to complete, given the challenges you have on audio. I think what Nirav was wanting to say was reiterate some of the key learnings, what we just described for the last half an hour. One was, of course, to try and ensure that we not only got the plant back in action, but we ensured not just preservation of value and enhancement of value. That's a key learning for us. You cannot sit back in your armchair and let things deteriorate. We need to take proactive steps to maybe interim finance, engage extensively with the directors, promoters, stakeholders, the vendors, transporters to ensure that you can get back and revive the plant. And we found that reviving the plant actually helps in encouraging activity all across all the stakeholders. We did talk about the fair and equitable dealing. I won't talk more on that. The updates to COC. I know there is sometimes the expectation from RPs that we can engage with the COC only when required to, or when we are required to under the law or under the code. I would encourage my fellow RPs to not just interact with the COC when you have to, but also I would suggest that you proactively choose to. It's a best practice we have found that if you meet the COC every month at least, regularly, provide them updates. Don't limit your updates to only what is required by the code.
we have
extensive. Be a little more extensive in your
Hello?
updates. Nirav, I've just taken over. Be a little more extensive in your updates.
Okay.
Provide detail on your operations, on the cash flows. You can get a lot more insights from the financial creditors. After all, these are the doyens of finance, so they will be able to tell you how to manage your cash flows and manage your credit far better. And then leverage the moratorium that you have, the extended credit period. It's a great boon. It's a fantastic aspect of the IBC, and you leverage it to the hilt. I will pause here. Please go on, Alaric. And this is where I'll request Alaric to take over and talk about the resolution plan process. We talked about claims, we talked about managing the affairs and all the challenges and how we address them and some of the best practices we were able to pick up. Now let's talk about the resolution plan process and how we achieved a successful resolution. Alaric, please.
Thanks, Vijay. Good afternoon, ladies and gentlemen. We've heard about the CRP process and the operations of the corporate debtor. I think the other pillar on which our complete IBC process rests is an effective resolution plan process. That is basically identifying the best resolution applicants, getting the best value for the assets, and completing this in a timely manner at the earliest. Having said that, this being one of the earliest cases under the IBC, as Vijay said earlier, we were exploring and understanding how best to complete this process in a very transparent, fair, equitable manner to ensure keeping full cognizance of the fact that this is an IBC process. We are appointed as officers of the court, and this process gets decided in court. Having said that, we at the outset understood that there was substantial value in this asset. As Vijay has already explained, there were substantial reserves with Binani Cement. Binani Cement was a branded cement operating, albeit in a limited market at the time we took over. There was interest in the company prior to the CIRP process. There was a sale process that was undertaken. There was interest in the asset. However, for whatever reasons, this sale process did not conclude. So given this background, and given that the commencement of the resolution plan process with the public announcement happened sometime in October of 2017, we had substantial time to evaluate the operations of the asset, to understand the intrinsic value of the asset, and also the fact that we were able to raise interim finance gave us a great deal of comfort and confidence that this asset had some value to it. Accordingly, the RP and the RP team, we spoke with the COC, and we had we explained the position of the asset and the requirement to identify a resolution process facilitator. A resolution process facilitator is basically an RP advisor who will carry this transaction, this asset, to the maximum number of people in an effective way, in a proactive way, to ensure the best value is obtained. And we've seen this culmination of all the CRP process, the operations and maintenance of the corporate debtor, and the resolution process culminate in a very successful transaction at the end of the day. The appointment of the RPF advisor was not carried out by the RP. It was that process was carried out with the approval of the COC by the legal advisor to the RP, and a transparent process for identification of the RPF advisor was carried out. Upon that, the bid invitation was issued. We published the bid invitation across the national publications, and the RPF advisor, through its global network, reached out across the globe to strategic investors, to financial investors. There were certain private equity investors that envisaged interest, as well as a mix between private equity and strategic, where funds came from the private equity and the strategic brought in the technical skill set to operate the business going forward. From this process, we actually obtained 27 expressions of interest, where 27 parties signed the confidentiality undertaking and had access to the data rooms, had access to the site visit, and to interacting with the management of the corporate debtor, of course, under the watchful eye of the RPF and RP team. The one point that I would like to highlight here is a learning for us and for all of us that run this process of looking to find investors under IBC. Most potential investors look at the IBC process as a standard M&A process, in the sense that they expect to have reps and warranties, expect to have conditions precedent, and expect to see certain conditions subsequent as well from the company and the officials of the company. So this is something that had to be socialized, had to be explained in context of the IBC, in context of the regulations of the code, to sustain the interest of the potential resolution applicants and give them a sense of comfort that this is not a typical M&A process run by an investment bank, but a process under the code, under the IBC, which was binding on all stakeholders at the end of the day. And typically, we would all appreciate the RP team, or even the company in this sort of a situation would not be particularly in a position to give reps and warranties or accept conditions precedent. Although certain conditions precedent would be mandatory in the context of conversion of licenses and basic business operating licenses that might be required from government authorities, etc. So this bid invitation process was not merely an advertisement in a paper or reaching out to potential resolution applicants, but also entailed a proactive interaction with the resolution applicants to explain to them the process, to explain to them what they were getting at the end of the process, and if a resolution plan is actually approved by first approved by the COC by vote, and then approved by the NCLT, by the adjudicating authority, then this resolution plan is binding on all stakeholders. So these are some of the concepts that needed to be explained, and I think we continue to explain these concepts to any resolution applicant trying to get into an IBC process. We were very fortunate to receive from all these interactions and running a very transparent VDR process. So we had a virtual data room set up where all the data of the company was uploaded. And given that this was an operating company, it was very critical that we upload ongoing financial data as well as operating data so that there was comfort for the resolution applicants coming in, and they could complete their diligence process adequately. Given that this process was run all the way from around November, when we started receiving interest, to the end of December, we had at the end of this process received 6 expressions of interest. While we were running the diligence process, we also had the challenge, which Vijay had mentioned earlier, of the overseas entities, because these were subsidiaries. The acquisition of Binani Cement would also entail taking over, by virtue of shareholding, the subsidiaries as well. And all the resolution applicants had requested to be able to see the data on the subsidiaries as well as visit the plants of the subsidiaries in Dubai and China. In fact, we at about this time, because of the difficulties with obtaining this data from the corporate debtor, we were forced to take up not only interactions with the promoters and the directors of the companies, the auditors of the companies, but also file a Section 19 to seek intervention of the adjudicating authority to direct all the officers and stakeholders of the company, the officers of the company and the promoters to assist in this process of diligence. In fact, because this was one of the first cases and IBC was still a nascent legislation, there were developments every day. And this was quite a roller coaster ride for us, because we needed to maintain compliance with the code. We needed to continue to maintain transparency, fairness, and communicate across all stakeholders, as well as consult with the critical stakeholders like the COC. So at this time, in fact, when we received the expressions of interest, we also received an expression of interest from the promoters of Binani. And around October of 2017, November 2017, if my memory serves me correctly, 29A came into play. And that motivated the promoters now to create issues with respect to site visits of overseas entities. And hence that Section 19 application was very effective in being able to achieve the site visits at both Dubai and China. So 9 parties actually visited the Dubai plant, while 2 parties visited the Chinese facility. Going on from there, right. So from there, we identified, because we were running a process that should be transparent, should be fair, and clear to all parties, and given that it is a process blessed by the NCLT and under the IBC at the end of the day, we had developed, along with the COC, in fact the COC developed the process document on how this process would be run. And the COC also defined an evaluation matrix under which the evaluation of the resolution plans would be done. So there was a clear and transparent indication to all resolution applicants on what they were getting into and what to expect at the end of the day. And having said that, while this process was going on in February of 2018, the Section 36A was notified, wherein there was a mandatory requirement for an evaluation matrix or evaluation criteria to be defined by the COC. So some of the activities that we had thought about and initiated as a matter of a fair and transparent process actually got included subsequently in the codes. The evaluation matrix again and the process document had to be explained and discussed by the COC and the COC legal advisors with the resolution applicants so that they understood each of the criteria and understood better how to prepare and present their resolution plans. Once the resolution plans were received, there are a huge number of compliances with the code that the resolution plan need to comply with. And as we know from the code, the compliant resolution plans are then put before the COC for consideration and voting. Given this was still a nascent process and nascent code, and this was one of the first cases to be taken up, we thought it prudent, given our principles of transparency and fairness, to allow all resolution applicants to come and present before the COC, pending verification of compliances and to ensure that the plan met with all the code required compliances. So there was a clear communication between the resolution applicants and the COC, and both parties understood each other very, very transparently and fairly. There were all-day meetings starting at 9, going on till 12, maybe in the night, where resolution applicants presented their plan to the COC, and the COC understood what these plans entailed. While this was the initial process or the first receipt of plans, which was around the beginning of Jan or mid-Jan 2018, immediately after that, as I mentioned, Section 36A was notified, and the evaluation matrix and the process document had to be re-examined by the COC and the COC legal advisors in context of this revised notification, and had to be socialized once again with the resolution applicants so that they could submit their compliant plans within this framework. So when the compliant plans we had the resolution plans resubmitted or submitted once again by the resolution applicants, considering the process and the evaluation matrix as per Section 36A. And once we understood that the resolution applicants had potentially submitted compliant plans, because through this process of preparing the plans, there were a number of discussions had between the resolution applicants, the RPF advisor, the RP's legal advisor, and the COC's legal advisor and COC representative to ensure that plans being received were completely compliant. Once we received these plans, we had a unique opening COC meeting where plans were not opened by the RP team when they were received. We maintained all the sealed envelopes, and we called a specific COC for the opening of the resolution plans, where even then the complete resolution plan was not opened. It was only the exec summary which was opened at the hands of the resolution applicant, and suitably initialed and signed off at the back as acceptance that the resolution plan as submitted by them is what was being opened and considered for the COC. The post this process, we followed the evaluation of the resolution plans, where the COC appointed independently evaluation advisor to evaluate the plans and present the evaluation methodology matrix identifying the H1 bidder. Now, I must go back a little here. In the resolution process document, post the 36A notification, the process was updated to identify or to indicate to the resolution applicants how the evaluation matrix would be used, and that negotiations would only be carried out with the H1 resolution applicant. And in case that negotiation or for whatever reason that plan was not acceptable, then we would go to the COC would go to H2 and so on. So post the evaluation of the resolution plans by the COC evaluation advisor, RPPL, Dalmia Group company, was identified as the H1 bidder. And they were invited to present and discuss their plan with the COC in compliance with the code. So the COC had a detailed discussion with the resolution applicant, and a date was set for the resolution applicant to come back on the queries of the COC and for the outcome of the negotiation process. However, in the interim, this is where the drama really started on this case. Another resolution applicant submitted a letter to the COC indicating a higher offer. And this was an interesting turn of events, wherein the COC was in a quandary of what exactly could be done, wherein the RP then shared the resolution plan in a transparent and fair manner in the context of the code, where the COC needs to decide on compliant resolution plans and decide for commercial viability, decide the doability and sustainability of the resolution plan in the context of the business. Given that there was a higher value that was being put on the table, the COC was called, wherein this was discussed, and the COC approved the RPPL plan with a close to 100% majority. After this situation, the matter was taken up in the NCLT and went all the way up to the Supreme Court, where the matter was referred back. It went all the way up to NCLAT, where the matter was referred back to the RP and the COC to include both resolution applicants for a negotiation discussion and decide on the better plan, as well as to give reasons, because about that time there was also the an issue of 29A that came up. So to decide on the matter of 29A. Most of these details are a matter of record in the orders issued by NCLT, NCLAT, and in some cases even the Honorable Supreme Court. So for those that are interested, you could always go back and refer to this. Post these discussions with the RAs as directed by NCLAT, the COC voted in favor of the Ultratech plan with 100% vote, and this matter went all the way up to Supreme Court, where the decision of the COC was upheld through a decision or an order of the NCLAT. This, in a nutshell, brought us to a conclusion of this resolution plan, where 100% of the the outstanding claims from various creditors was resolved as part of this resolution plan. And post the NCL, the Supreme Court order, the plan was implemented and the company taken over within a couple of days. Of course, the pre-work to ensure that this could happen within a couple of days happened right through the process, where documentation and support papers that might have been required by the resolution applicants, as indicated in their resolution plans, were prepared and kept ready so that the closing actions could happen in a timely manner, maximizing and optimizing the value of the corporate debtor. Thanks, Vijay.
Thanks, Alaric. And this was a good summation of the entire process. If I could just go finally to summarize the key learnings on this, as once again the takeaways from this project. I will call out just one. The first was the first one, that's imparting knowledge to all about the process. The IBC is still a nascent code, so I will encourage all resolution professionals to be proactive about guiding claimants, guiding statutory authorities, government authorities about the claims which they need to file, how they need to file it, and help them in the process. I think that's what we did in the sense one of the practices we have used and now we adopted across all the projects is in the very first weeks of the process, we write to each of the authorities engaged by the corporate debtor. We talk to the corporate debtors team, find out who are the main authorities, and write to them, attach a copy of the public announcement, request them to file their claim, show them where the regulations are, and if they put down contact details. So if they call you, you can explain all this. And if you're proactive about these things, it makes it far easier later rather than getting into litigation about claims. And that is what we called out. I think Neerav also touched about it in terms of the VAT authorities and the sales tax authorities, was to go and meet each of these officers. Just because you're an officer of a court does not mean please don't have any delusions of grandeur. To help yourself, best is to help others. So reach out to the authorities, explain to them, because it's very difficult for an authority to appreciate that the IBC code overrides his law. No authority likes to be told that there's a law which supersedes his law. But to do it patiently, to do it with empathy and sympathy, and I'm sure you would be able to work out a collaboration. Go on, please. Alric?
Thank you, Vijayji.
And I will pause here because I know there are some questions, so I will not take on further.
There are some
lots of questions.
And I would request, Pramodji, if you could please get the questions. And I think there are questions which are first time I'm seeing these questions are very well formed also, Vijayji. So, Pramodji, I will put this to your table. Please do take some questions and we can.
Yeah, Alaric, you can stop presenting.
Yes.
Thank you, Anilji. Actually, this case can be held as a landmark case, landmark decision, as the decision focused to extract maximum value from the resolution of stressed assets and ensure that interest of operational creditors who are not a part of COC are also well served. We have received lots and lots of questions. Let's take up one by one. Of course, the first question is the learning which Vijayji already has summarized in last few minutes regarding going concern and preservation of values and the principle of fair and equitable dealing to be followed in all actions. But here's this question. How was the contract laborers treated? They were treated as normal employees, or the contractors who employed them were treated as operational creditors, and whether this created any problem?
No, this is a very good question. This, I would say, is one of the gray areas of the IBC code where contract labor are still operational creditors. Any service provider is an operational creditor. He is not an employee, so he doesn't come under the definition of employee and workman. And therefore, this is a challenge. Luckily, in this case, you had a situation where all operation creditors were paid off in full. So this was, so contract labor in substance has already been treated almost equitably and in line with every other employee and workman. And luckily, but you're right, you're absolutely right, Prabodji, and whoever is the one who's asked this question. In other cases, the contract labor does face difficulty and face a lack of balance.
Okay. This is now one basic question. RP and his team are literally stepping into the shoes of promoter operation team in running the affairs of the company during the lockdown. Since they are neither expert nor possess the requisite business running experience, how did the team manage to convince the operational and financial creditors towards migration to a successful resolution process?
Again, a brilliant question. Again,
this you have to answer in detail, sir. This you answer in detail.
Okay. Okay, let me try and capture all that we did. The first is, like I said, you must have an expert team. While you are, we are very strong on certain elements, right? We are very strong on process. All of us who are auditors know that process comes innately to us. That's one of our strengths. Second, even as tax advisors, we are able to get to the core of the problem. We look at different perspectives. We just don't look at it from a legal point of view. We look at the core of problem. Third, as consultants and as advisors, as chartered accountants, we are quite solution oriented. Apart from the Indian jugaad which is there in all of our genes, as chartered accountants, as professionals, we are taught to find solutions. Because even when our clients come to us, they come to us with their problems. The objective is not to redefine the problem. It is to find solutions. So these traits help us RPs who are chartered accountants. But apart from that, let us be clear, as I've been saying repeatedly, we have no delusions of grandeur that we have a monopoly on wisdom. So we had experts. So we had legal advisors for the legal questions. The company secretary of the corporate debtor helped us on various secretarial matters. We had a technical team from another very reputed firm who helped us on operational matters. And quite a few of our people of the RP team who are with me, like even Alaric is not a chartered accountant, he's an MBA and he has got very good experience on resolutions. We had other people who have run companies in their previous avatars before joining our firm. So along with us, we had people who had actually worked on in the Middle East and in very hostile conditions as part of our team. So it is required these kind of experts all around to put together. Second, one of the greatest advantages we have as chartered accountants, we are very good project managers. Imagine a large audit, right? When you have audits and you have 5-6 people or you may have 10-12 people on the ground, how are you going to coordinate all that? Or when you have to do physical verification of all your clients on 31st March, it's multiple. So we are master project managers actually. And it's some of these learnings as a chartered accountant which we can actually put into place when you're an RP. When you've got various sites to look at and you got to depute people at each of these sites, use these strengths that we have. And the third, apart from having expert team, using your own expertise as a chartered accountant, it's to use your core attributes, which I explained right in the beginning. And that core attribute which you require in the resolution process is transparency. Why do I keep insisting on that? Let us be clear that you get into a situation which is hostile and there's a high level of mistrust. And the only way you can develop trust is transparency. Honesty in your actions, honesty in what you say, honesty in what you do, honesty in intent. And if you're honest and if you continuously be vocal and you demonstrably so, you speak it and you action it, that your intent is resolution of the company, that you do not have any side agendas, you're not trying to make money in this process, but you're actually trying to find a resolution for the corporate debtor, and that the resolution actually benefits. It's the greater good, rather than looking at just the good of one creditor or one operation creditor or one vendor. Then the people actually sat down with us. But it's a laborious process. It took days and nights sitting with the transporters, convincing them, explaining to them that we have we have that expertise and we will work with you. And then finally, and most importantly, do not make enemies. You have enough enemies anyway in a resolution plan process, because RP is supposed to be colluding with everybody. Everybody will say that you are in collusion with somebody else. The promoters will say you're in collusion with the creditors. The creditors will say you're in collusion with the management of promoters. One resolution applicant will tell you that you're in collusion with the other. So the best is, fight, you hold your ground, hold on to what you have to say, be convinced. Conviction of character, conviction of your truth is very important, and hold your ground and continue to work on that basis. And if you're able to use all these attributes, Pramodji, I'm sure you will have a successful resolution. It requires a bit of balance, just like in life. In life also requires balance. For a successful resolution also requires a bit of balance.
So, Vijayji, I just
hope
got
that was
on to
elaborate
something. No, I think you were absolutely clear. I just got on to something that you said, and just on the, and this is on a serious note, can you make money on the sides?
It's a serious question, but every chartered accountant will tell you that you can. But we are all men of profession, men of integrity. We have a code of ethics which we all live by.
How
And
do
the
we
respect society.
How do we create this perception, which is so important for practicing IPs? Like you said, that you're not on anybody's side. Also, this general human tendency of thinking through that isme to kuch gadbad hogi, whatever, I don't want to stress on that, but what I'm saying is, how do you create this perception that you've come to do business here, you're professional, you will make sure that you will keep everybody's interest in mind? How do you create that perception?
One is you limit your side discussions. Whenever you have one-on-one discussions, people are uncomfortable that how many such side discussions are you having? If all your discussions are out in the open, so if you're talking to creditors, you do it at a COC. If you're talking to management, you do it all with them together. I don't like to have one-on-one discussions. Well, that leads to mistrust. People wonder, what are you doing behind closed doors? If I talk to all the officers, we will do it as an open house. All the officers together. Because if you divide and rule, it leads to a lot of mistrust. But if you take everybody together, then they realize, okay, you don't have any side agendas. And more open and transparent is your action. You're very visible. You go spend some time at the corporator's place. You do all the activities out in the day. Even there is this old case, right, where even the Supreme Court had said on that LIC and escorts, if you do things in the midnight, it clearly shows that you're afraid of the light. But if you choose to do everything light, and that is our motto of our institute as well, that
So
let us be awake when everybody else is asleep.
That just brings me to another question, and I'm just trying to get some practical insights. So while you do act and the perception of transparency is kept alive, there are always these interests which are at crossroads within an organization also, and also outside in the ecosystem, that people would not want it to go through. Why? Because it might benefit them not to let the company run. For example, a competitor will not want it to be live, right? Makes sense for them. How do you take out the bad elements or the negative distractions in the company? May not be in the ecosystem, of course, you'll have to fight it. But how do you do this within the organization? How do you say, this gentleman is not good for the job, I'm going to replace him, whatever?
A very good question. Again, there is no one answer fit all, sir. I know we make mistakes as well. But I go back to the old philosophy as auditors. Trust but verify. And that is a philosophy you have to use even with human interactions as an RP. And in fact, you may have to have a higher level of professional skepticism when you interact with everybody. You start with this degree of trust in any human relationship. But your professional skepticism calls upon you to verify. So validate. You may not validate it through documentation, but you validate it through continuous conversations. If you're told the same thing by more than one person, then you have some comfort it is the truth. That's why even as chartered accountants, we don't rely on only what the finance and accounts team tell us. We go out and talk to the production people. We go and talk to the marketing people. Their understanding of what the sales are and what the production is may be different from what finance and accounts tell you. And then you realize that there is some disconnect in the information. You talk to the managers, you talk to the workmen, you talk to employees. They may tell you far more of production and capacity utilization than what you see in numbers which you get from the accounts team. And that kind of continuous collaboration, conversation, and communication as professionals, like I said right at the beginning, we know as chartered accountants that there is more outside the books than in the books. There's always a story to everything that's in the books, and it is important for us to go back and get that context in that framework, sir. I hope that has been useful.
Yeah, absolutely.
I think,
Pramodji, please.
I think Anilji, these are some basic and extempore instincts which we develop only through experience.
Absolutely. I think Pramodji, your video and voice is.
And I mean, before coming to again a deep diving question, one again light question. How does the RP protect the interest of the consultant chartered accountants, professional fees you can understand, due from a company undergoing IBC proceedings?
Well, by placing his interest last.
His interest last.
Nobody's going to like you on this call.
The RP's interest has to be last. Your self-interest has to be last. If you believe that the interest of the corporate debtor is first and your self-interest is last, then automatically your self-interest will also be sorted.
But Vijayji, rather in all the liquidation proceedings, the first part we keep aside is the liquidator's remuneration, and then go for the other things. Anyway,
but even in liquidation proceedings, the liquidator is paid only when he realizes the assets or when he distributes the money. Otherwise, he's not paid.
Mm-hmm. But the first payment is what he has to get. Anyway, this is again a good question. In case the unit closed for quite long time and there are no chances of resolution revival, and corporate debtor files an application for initiating CIRP with the educating authority, and sole financial creditor FC is not interested to run the CIRP as he has sufficient secured assets to enforce the same under any other law like SURFACI, etc. So what is the remedy available to financial creditor to stop the process as also to avoid unnecessary burden of CIRP cost on him?
That's a good question. My immediate reaction is, we have seen in one similar case, is try and expedite the CRP process when you realize that there is no resolution possible. You can do a fast track, literally a few months, go out, put the expression of interest. You don't need to take the full 6 months and say that there is no plan available. Go to the adjudicating authorities, move for liquidation. And in liquidation, your sole financial creditor will then be able to realize the security on the assets. That's what I have in mind. I will pause here in case Analytic has something to supplement. Or even if Nirav has something to say to add on to this, in case they have another thought.
Yeah, thanks, Vijay. So this is definitely a good question. So I think there are a couple of options which the financial creditor can pursue. The first and foremost is to challenge the order itself. In terms of which has been passed by NCLT for commencement of CIRP, and in fact we have seen in some cases where many times the orders which have been passed based on reasonable grounds is being set aside by NCLAT. So that would be one particular course of action. The second is maybe the 12A settlement, and here again I understand the corporate data won't be forthcoming. But this is something which again the FC can propose, and this is something which they would have to represent to NCLT to demonstrate that there is a resolution which can be achieved outside CIRP. And the last option I would suggest would be for the financial creditor themselves to submit a plan and take over the asset. So again, this is something which would be doable, wherein if they do believe that the asset is holding value, and if by holding it is making sense, then there have been again cases wherein financial creditor would submit a plan and take over the asset from a future realization perspective.
All very good point. Of course, and if there's no resolution process, to try and expedite to liquidation where you can liquidate the assets, sir. Pramodji?
Yes, sir. Then this question is, of course, I'll continue with what Anilji had, that basic instinct and extempore instinct. How did the RP appoint his key trusted personnel for effective delivering?
One is, I should say, I am blessed because my team, people like Alaric and Neerav, I can trust with my life. And it is because we have been working together for many years, and that has helped us build that level of trust. But you're right, the selection of advisors is important. So what we did, of course, was when we came to, for example, selecting the forensic auditor, we put out bids. We found out who are the people with credibility, technical expertise, who had perhaps known the corporate data or in any other form, who have done any of the work. So there's knowledge and experience, and also the costs. And then we present all this to the committee of creditors, and the creditors then, along with the RP, is able to identify the best proposition. The RP proposes, and the COC approves the cost. The appointment is made by the RP, but the COC is the one who approves the cost. So each of these, again, if you follow a collaborative approach, a consultative approach, you're able to identify who are the best. And sometimes it's good to even seek information from the committee of creditors. Have they worked with any other forensic accountants who in the past on this corporate data? Is there anybody else they could recommend? And then we have extensive dialogue with each such advisor before we appoint them, sir.
Then Vijayji, of course, this NCLT ruling that held Dalmia's plan as discriminatory has simultaneously also opened up Pandora's box on the grounds on which the appellate authority can reject a resolution plan. But this inside story, how come Ultratech did a backdoor entry?
I won't call it backdoor, sir. You got to say that we have to understand that at that point in time, the law was still nascent. Some of these very defined timelines have come about only much later. Only now that you have a more extensive and elaborate plan put down, right? Expressions of interest, identified resolution applicants, list of resolution applicants, all that is now come about now in the regulations and code, much after. There, at that point of time, it was still grey. So then, as Alaric explained, the final decision was still out there. And if you go back, the preamble, the fundamental principle again is maximization of value in a time-bound manner. So given these principles, and given the fact that here you are doing fuller justice to all the stakeholders, right? The financial creditors, you said your contract labor, all the operational creditors, statutory authorities. In that case, then obviously better justice was considered to be carried out.
Okay. Then this question is, I think, creating more curiosity. You say in 2013-15, the holding company launched a disinvestment program for debt reduction. So you observe that this caused distraction?
Well, in the sense, unfortunately, because it did not succeed. If it had succeeded, then it would have been a debt reduction. But unfortunately, it did not. The holding company tried to sell their grinding unit of the Binani cement. Even Binani cement tried to sell its grinding unit. The holding company tried to sell a portion of its shares in Binani cement. Since it did not succeed, unfortunately, then a lot of the management attention, promoters' attention goes into this activity, any such disinvestment, right? And that obviously, if I know I use the word distract, it distracted itself, but it diverted the attention to some extent because the focus was then distracted from the operations, the working capital, managing the financial stress. It's a combination of all these factors. If you look at it, in any such company, wherever there is financial stress, it's never one element, right? You may pick out what is finally open and visible, like the tip of the iceberg, but there's so much more below. And it's a combination of all these elements, some of them external, some of them internal, which unfortunately sometimes come together, which causes this significant imbalance.
Okay, then this makes me ask you another question. During CIRP, was ostentation of interim finance explored by RP?
Ostentation means, well, we were definitely not wanting to be very visible about it and talk and make a show of it, as ostentation suggests. But we were very serious about interim finance. We started the plan, and thereafter we went to the Financial Committee of Creditors, and then they were convinced that we were able to do it. You know, your earlier question, sir, did we show the expertise to do it? When we demonstrated that we were able to hold the plant, we were able to demonstrate that we were able to manage it, manage the working capital, manage the inventory, the distributors, the dealers, the transporters. The financial creditors saw that, not just over. It was not at the very first meeting. It took a couple of meetings, more than one. By the time then finally they were convinced that yes, and then it required multiple iterations. How much money required, show us the cash flows, far harder than trying to get a loan out of a bank. Well, after all, this company is in distress. But to get that, and then of course we kept it low key. Obviously, does not want to make a big song and dance of this, because if you're ostentatious about something like this, then people will misunderstand. Whereas if you keep it that this is after all just critical funding, you're in ICU, you're getting a bit of transfusion. That is all. Then that actually works.
I think this question was more asked in the background of Ultratech getting in the view of the member a backdoor entry. I think it was in continuation. One more deep diving question, sir. Kindly elaborate the initial difficulties faced in handling the CD and other stakeholders and AA by sharing them with some examples if you have.
Good question. Okay, then I will labor on this point. I think Nirav also talked about it. Okay, let's set the context right at the beginning. When this case was admitted, right, the law was still new. So even creditors were new. The promoters had challenged the application quite a bit, but finally it had been passed and admitted. On the ground, reality was what? The plant was shut. We first went, of course, to the corporate debtors office in Bombay, but we realized that whereas the registered office was Calcutta, the corporate office was in Bombay, but the hub of activity was at the plant. And it required for us to very quickly learn on our feet that there's nothing at the registered office. There is very little at the corporate office. There's only as sort of it was after all again in premises held by a sister concern, that the hub of activity was at the plant. So we very quickly managed to get our team overnight to Binani Gram, which is their hub of activity at the factory. And then it was discussions night long with production, with the transporters to understand. And imagine, this is a plant which is in the heart of a tribal area. Highly, highly dangerous situation, no connections, very little communication. In that sort of environment is the hostility we faced, high level of mistrust as to what are you doing here, because these were people who were extremely loyal to the promoters who had built that plant, right? And people who are there, employment right from the beginning. And they're wondering who is this person and who are these people who is this RP team and who was this RP who could relook at this. So this was the operation challenges on the first few days. How did we address it? Again, I labor the point, continuous communication. We sat down with transporters, and I had some fantastic partners with me and colleagues who had some of these conversations. Some of them are far better than I could. Some of the conversations I led, some of the conversations others led with the transporters, with the management, with the product. Because how do you challenge the production in chief that your capacity utilization can be different when they say something? But fortunately, our technical experts could challenge that. And when they realized that the reason we were challenging was not to prove them wrong, but to find a way to how both of us could be appreciative of the solution. And then the respect that we could gather from the employees thereafter, because we ensured that payments were made in time, like Nirav said, right? How do we address some of these issues? We ensured that all employees were paid in time. That is the greatest learning we can get as far as employees are concerned. In a time like even today, right? If you are able to make payments to all employees on the 30th of each month or the end of each month, it is a great asset. But if you were able to do it, even the employees were shocked that when we ensured the cash flows. I know Nirav was looking at it personally, that we made the payments in time. We did the assessment and paid bonus. They weren't shocked that we could make, because after all, with the committee of creditors approved, but we did all that. So these were all the hostilities and challenges. but which we addressed. It was not an overnight addressal. It was 2-3 months of continuous pain. There was a lot of cribbing. They will go through a test of fire, literally a test of fire. We were virtually gone into the clinch, and thereafter we hopefully came out.
So in that case, Vijayji, how was the interim finance obtained in this time of distress? On which financial security or asset could you arrange this interim finance?
In a way, sir, it was addressed that the interim finance will be equate to the CRP costs. So in terms of the waterfall, it would be quite upfront. There is no security. You can't secure the assets. You can't do anything else. But again, Alaric was quite deeply involved in that discussion with the financial creditor who gave us that interim finance. It required multiple iterations. We had to prepare the business plan. They had to be convinced on what we were planning to do about it. They finally gave it, but in tranches. It's not that while they may have approved a full amount, they released it in tranches. And when we showed and demonstrated that each tranche was used for the purpose we said it would be used, tabled all this at the committee of creditors. We tabled everything at the committee of creditors, the cash flows, what we did with the money, how was it expended, what is the money coming in by week. So more the transparency on that helped us. Alaric, would you like to supplement on this interim finance, please?
Correct. Thanks, Vijay. So fundamentally, we not only developed the business plan, but we developed a credible business plan along with the technical advisors. So there was a definite possibility that the repayment schedules as required would be met, right? And the interim finance did not come upfront. The interim finance actually came somewhere in October, November. So it was already 4 or 5 months down the line where demonstration of the plant activity, the plant revival, the operational revival was already demonstrated, communicated, socialized with the COC. So that gave them a great deal of comfort because there was no possibility of securitizing anything or encumbering the asset any further, except for the assurance that this interim finance is treated in precedent as priority funding and will be paid out in priority, right? We also, this is the previous question you asked, whether ostensibly we approached on interim finance, but given the COC was fairly large, we actually approached all the COC members for interim finance, right? And while all of them considered it, we had a positive finance obtained from one of them. So yes, and this is probably one of the only cases where interim finance in the context of interim finance and not a contribution has been raised.
Thanks, Alaric.
So in that case, did you hold any COC meeting after you filed resolution plan for approval, but while NCLT approval was still pending and in litigation?
Yes, we did. And I think now, I know there was a bit of gray area. There is still a bit of gray area whether you're allowed to, should you, does COC still exist? The answer is, in our belief, it does. And if you look at it from a best practice point of view or a better in substance, it does. Because the operations continue. And suppose the NCLT takes a few months to approve, and sometimes the delays are there. Can the RP act on his own? The answer should be no, because there's still a lot of activities the RP needs to do under the supervision of the Committee of Creditors. So there are operational updates, there are approvals to be sought, there are continuous activity till the plan is approved. So yes, we continued to hold COC meetings very regularly during that period, sir.
Okay. And then, sir, here is one question which requires your advice, not particularly on this case, but a general question. Where a company under IBC is unable to revive, what stand should the company personnel or RP do in connection with the pending tax litigation cases before maybe VAT authorities or any other authorities? What stand should the RP do in connection with all these? Where where a company is unable to revive?
If the CRP process is still on, the RP still needs to show conviction that a resolution is possible. So your interactions with the authorities must still be to use the moratorium to the hilt. To say that there's a pause. We are hopeful for a recovery or a resolution. So till such time, you please file your claim and we'll verify it and admit it as after verification. But it is not going to be that you can please go ahead and continue to litigate. You should not give up. The RP should not give up. As long as the resolution is going on, continue the dialogue with the authorities. Mention that the resolution we are still striving for. So use the moratorium, because the authorities may continue to can have a dialogue with you, but they can't pass any orders. They can't pass any orders which is against the corporate data because of the moratorium. And therefore use the benefit of the moratorium in this time of impasse, is my suggestion, sir.
Okay. And then did the corporate guarantee issue relate to guarantee issued by corporate debtors? In final decision, was this corporate guarantee included in admitted claim?
Good question. Yes, it was included. Of course, there was an agreement and settlement between all the financial creditors. And apart from that, I think thereafter there have been various other case laws. In this case, the corporate guarantees which were issued by the corporate debtor on loans taken by subsidiaries and sister companies, the corporate debtor had given a guarantee. So though the guarantee holders said we are also financial creditors of the corporate debtor, they were included in the COC as financial creditors.
Okay. I think we are running short of time. One more question, Anilji, if you permit, we can take.
Please.
How was this 100 crore interim finance organized at the time, considering that the consortium of lenders had not approved the financing, which led to the company going through this whole process through IBC?
Well, yes, you are right in terms of that. The corporate restructuring scheme, which was there earlier, did not pass through. It failed because I think they were expecting certain commitments from the promoters. I'm not getting it. I don't know the details of why it all failed earlier. I can't recollect. But I think they were expecting certain commitments to be met by the promoters, which did not go through. Whereas here we labored on the point of how we were able to get the interim finance, and we were quite keen that we stuck to those commitments which we had put by when we took this interim finance. Hopefully that helped us, and luckily then the volume of activity picked up, and sometimes when you try good things, it's said that universe will help you. So luckily it did, and we were able to. There was uplift in the market. The dealers also was trying to sell our product. Then there was a bit of increase in the volume. Capacity also got up. Then there was a bit of virtuous cycle that started. Working capital increase, production increase, sales increase, money increase, and therefore we were able to then repay also.
So in that case, what will happen to its subsidiary and principal agent, Binani Metals, and its assets?
The subsidiaries, the shareholding of the subsidiaries are with Binani Cement. So Binani Cements is also transferred to Ultratech. Indirectly, therefore, Ultratech has ownership on all these 100% subsidiaries. And wherever it's less than 100%, to the extent of that ownership interest.
Okay. And this being an early IBC case, was it only LV that was determined? If so, in case the new guideline was followed and FV was also determined, would it have resulted in higher bids?
Well, we did achieve very high bids. It was only liquidation value, but because we were very clear in telling all resolution applicants that liquidation value, of course, it's not disclosed to them, is only a very minimum benchmark. And the idea is, luckily, because it's very easy to see the negatives of a corporate debtor in insolvency. Oh, it's insolvent, it's bankrupt, it has no money, no capacity. It's very easy to find the negatives, but it's very hard to find the positive. But if you make that bit of effort, identify the positives. Alric did a very good bit on that. And then go to the resolution applicants and present the positives. This is a fantastic asset. Like we said, it's got great limestone reserves. It had already a great infrastructure. It was really built well, and it had a good niche in the market in that area. If these positives are brought about to the strategic players, they appreciate the positives far better. And then you explain the benefits you have of IBC. You start with a clean slate, right? All your litigation goes away. And if all these benefits are put together, therefore then we had a very high level of interest. And then when you know that there are 6 bidders and there is increased competition, and then when we went to the second round of bidding, the prices definitely went up. And then therefore you had a situation where you had over 100% recovery, right?
Well, Anilji, I'm afraid that was all the time we had for today's program. I'm sure this case study with wealth of knowledge and great learning value will guide the path ahead in insolvency area and will throw light in resolving cases in future.
No, absolutely. I think has been fantastic. Absolutely great insights with all of you joining us here today. Congratulations to your team, and I'm sure you'll continue to do this great job. So I would only, I think that these case studies are bringing out the desired impact or insights that we wanted to do, and I'm sure we'll continue to do this and hopefully maybe more on the way. So I would only request Pramodji to do the honors of thanking all of you here today. So Pramodji, thank you so much.
Sure, sir, it's my proud moment. Let me take this opportunity to thank learned and knowledgeable speakers, CA Vijay Iyer ji and his team, CA Neerav Pujara ji and Elric ji, for such a detailed, touching almost all the important and minute aspects also, for such a lucid presentation and illuminating address. I'll say you have completely demystified the whole mystery. Thank you, Chairman Sir Anil Sir, also for leading from the front and as usual giving us, and I'll say aligning our whole team, something to determine and focus and something to manifest into positive results. Thank you, Rita ji and office, for making all the necessary arrangements, and thank you all the viewers for your interactive participation. Thank you to all.
Yeah,
thank you.
I hope to see you soon again next month. Thank you. Bye.
Thank you. Thank you very much. Stay safe, stay well. Bye-bye.